Global markets on Friday await the critical August monthly U.S. employment situation as the report could signal a shift in the Federal Reserve's economic stimulus program. Joining us from Stamford, Connecticut today for our live streaming coverage of the event is Kevin Cummins. He's a U.S. economist at UBS. Kevin, thanks for joining us.
Thanks for having me.
So Kevin, economists are expecting non-farm payrolls to rise to 180,000 from last month's 162,000 with no change in the unemployment rate. What's your prediction here?
We have a little bit above expectations at 210 on payrolls and an unchanged unemployment rate.
Kevin, it looks like we have 169,000 payrolls added.
That's a little bit below expectations.
Unemployment rate did drop to 7.3%, but as you know, that unemployment rate dropping is not something that's gotten too many economists super excited over the past many months.
Yeah, that's right. I mean, it depends on why the unemployment rate dropped. If it's because household employment accelerated, that would be a positive sign. If it's people dropping out of the labor force, that could be taken as a sign of uncertainty and more of a negative sign about the future perspectives of the job market.
Right. In fact, Kevin, I'm hearing right now that the participation rate came in at its lowest level in 35 years.
Yeah, that is a continuing trend that the participation rate is slowing. If more people are optimistic about the outlook for the job market, then you'd probably start to see a little bit of a tick up there in the participation rate. But the fact that it fell is not all that positive of a sign. So based on, it sounds like a drop in the labor force and a little bit disappointing headline for August payrolls, it's probably softer than expected. And markets are probably reacting to that.
Sure.
So it's certainly probably going to keep alive the debate whether or not the Fed begins to taper its asset purchases.
Futures immediately have moved higher, actually, which maybe is a little bit surprising, though. As you know, Kevin, and as many market participants realize, these markets do have an initial reaction, and by the end of the day, we might see something entirely different.
Right. On average hourly earnings on the month-to-month basis,
we were expecting a 0.2% rise, so...
Yeah, last month they were down on the month in July, initially reported. So, we'll see if that'll help consumers' purchasing power.
When you kind of walk away from this, the big question on everybody's mind is, will the Fed begin to taper? Maybe that's why futures moved up. This number a little bit softer than expected, though, not terrible. What do you think? Is taper still on the table?
Yeah, I think it is. I mean, it's not all that different from the trend. We've seen a little bit of slowing, at least through the data through July. We've seen a little bit of moderation in the pace of payroll gains in the last couple of months relative to earlier this year. But, the year-to-date average had been running about 192,000, and that's what the Fed is looking to achieve here. Gains of somewhere between 180 to 200,000 jobs a month. That is more than enough to keep the unemployment rate, downward pressure on the unemployment rate. Your economy only probably needs to add about 100,000 jobs a month to keep the unemployment rate steady. So if we're adding, even 169,000 like in August, you're likely pushing the unemployment rate downward. Now, in this particular month, it sounds like some of the drop in the unemployment rate reflected a drop in the labor force, which isn't all that positive of a sign. But gains of 169,000 are more than enough to keep the unemployment rate on a downward path. The Fed has suggested that they're going to taper at some point this year. This morning's number, at least on the surface, from what you described, sounds like it's a pretty active debate. But we think that the Fed is going to more likely taper on September 18th and at least announce a taper that'll likely begin in the fourth quarter.
Right. Kevin, I wonder, when you guys are looking at this and the discussion of taper or not to taper, this sometimes it feels like it becomes more of a discussion among people who are very, very familiar with the business world, and it may be something that doesn't connect with the average person or the average consumer. What is the takeaway that they should be looking at with these month-to-month job numbers?
Right. Well, the labor market has made improvement since the Fed began its asset purchases last fall. If you looked at payroll gains, then they were averaging somewhere around 130, 135,000 when the Fed embarked on QE3. Now job gains seem to be averaging closer to 180 or so thousand a month. So, we had improvement in the labor market. Inflation has been very low. It's below the Fed's 2% target. Some members of the FOMC want to see more confirmation that the slowing that we've had and the fact that inflation is below, some of the factors that have slowed it we think are transitory, as has the Fed described those. So, right now, the Fed seems to be probably comfortable with the amount of stimulus they're providing on a month-to-month basis, but it seems like that as that balance sheet grows, there's more reason for them to start maybe dialing back on the amount of purchases, as we've seen some improvement in the labor market. The economy seems to be moving in the right direction. Job growth as well as GDP growth is expected to reaccelerate in the second half of this year and into 2014, that you're probably not need of the amount of stimulus that the Fed is providing right now.
Right.
One of the things that they may do is, rather than buying $85 billion a month, dial it back a little bit, start to taper the purchases, but extends people's expectations of how low and accommodative they'll be with regard to the funds rate.
Sure. Well, Kevin, we're going to keep an eye on it, of course, and thanks so much for coming in. We always appreciate your analysis. We hope to have you back.
Okay, looking forward to it. Thanks for having me.
All right. For The Street, I'm Joe Deaux.